One stock, one line, $139 all the way to $183. And the entire move rode a single moving average that almost nobody draws correctly. This is the 5-day secret, and the handoff that kept Brian Shannon in the trade the whole way up.
That 5-day moving average is starting to flatten out. Then I buy the higher high above that, but I do it on a 2-minute time frame. So NVIDIA was a great purchase a week and a half ago, and I'm still holding some of that.
June 25th, NVIDIA breaks a tight flat base and closes at 154 on rising volume. But here's what most people miss. That candle didn't just clear the base. It cleared the old January high. This was a breakout to brand new all-time highs. Blue sky, nothing but air above. And the 5-day was already curling up underneath it.
If we have a rising 5-day moving average, we can spend a little bit of time below it, but are probably shakeouts. It's innocent till proven guilty.
Now, the secret. On a daily chart, a 5-period average already is the 5-day. Simple. The magic is intraday, because a 5-period line on a 10-minute chart is only 50 minutes of data. That's nothing. The true rolling 5 days is far bigger. A trading day is 390 minutes. Times 5 days, that's 1,950 minutes. So on a 10-minute chart, the real 5-day is a 195-period moving average. On a 15-minute, it's a 130. Drop that line on and watch it hug the entire trend like a guardrail.
So then I looked at it, I said, well, what's the significance? 2,000 minutes. There's no significance to that. So I started thinking about what is a day of trading, which is 9:30 to 4, which is 6.5 hours, which is 390 minutes. 390 minutes times 5 days is 1,950 minutes. So a 1,950 minute average is the true rolling 5 days. So on a 10-minute time frame, that's the 195 period.
Three times over those 2 months, the stock dipped under the line. July 1st, July 21st, August 1st, 3 shakeouts, 3 holds, every one of them flushed the weak hands and kept going, right up to the late July peak near 183. And this is pure Shannon. He doesn't chase, he doesn't buy the dip, he buys strength after the dip.
And I always say, no, don't buy the dip, buy strength after the dip.
And you don't have to take my word for it, because Brian walked through this exact stock live on stage.
So here's NVIDIA. You can see here's my 5-day moving average, which was declining, but we gapped up that day. And so when it gaps up with that 5-day moving average about to turn higher, I look at a shorter term time frame, and I go over to, like I said, chase the gap or wait for VWAP, showing a very clear pattern here of higher lows and higher highs. Those are the types of trades that I'm trying to look for. It's in an established uptrend on the daily time frame. It's pulled back. It's digested a little bit. It's an institutional favorite. So
let's do it on our chart. Drop down to the 30-minute. The pin goes on 1 bar and 1 bar only. The June 25th, 9:30 open at 149. That's the gap that clears the old January high of 152.90. You anchor the VWAP right there to the breakout. Now, the entry. Price gapped above that VWAP and never looked back. It held above it all day, so you've got 2 choices. Chase the gap at the open or wait for VWAP, and late in the morning, it gave it to you. A clean pullback to around 151.30 that kissed the rising anchored VWAP and launched. By the close, 154.10. That's the trigger, stacked 3 deep, the daily uptrend, the true 5-day rising underneath, and the breakout holding above its anchored VWAP. A level of interest on the big chart, a precision entry on the small one. Here's how he stays in. As a trend matures, the original anchor goes dead. That April 7th low, the panic bottom near $86 is now $60 below price. Useless, so you hand it off. You re-anchor to the most recent significant low, and then to the last place the old anchor was defended, daisy chaining the anchors up the trend, always measuring the part of the move that's still alive.
And we look at it and say, well, it's crossing above and below the VWAP. It's not telling me anything. Well, just the fact that it's crossing above and below is telling you something. It's telling you there's indecision. So you look at the market and you say, well, is there structure here to trade? It really took off right here. That was a new momentum campaign right there. And then notice how that right there was where we saw it pull back perfectly to. So we'll hand it off and say the last time, so is that anchor relevant to me right here, right now? So our next level of interest to anchor from was the last place that anchor was touched.
And where you start the anchor matters, because price has memory. Anchor to the high volume events, the earnings gap, the breakout, the capitulation low, that April bottom traded over 600 million shares. That's where the psychology reset. By the end of August, the daily 5-day tops out and rolls over. And that's the first thing Brian watches, not price, the slope. A rising 5-day buys every dip the benefit of the doubt. A falling one takes it away. Then comes the warning, September 2nd. The stock closes below the 5-day for the first time at 170, and that day's low pokes under the August floor. A crack, not a break. The break comes September 5th. Price closes at 167, below the August swing low of 168.58, below the 5-day, below the 10-day. The line in the sand is gone. That's not a feeling, that's a rule.
But it keeps making the higher lows above the rising 5-day moving average. And then yesterday, it broke the 5-day moving average, but held the month to date. And then this morning, it did make a lower low here. So again, I have a rule for that. So I don't set my stop under that. My 5-minute rule is I give it a 5-minute bar to close.
And notice what he does on the trigger day. He doesn't panic sell the open. He drops to the intraday chart, watches the month-to-date VWAP, and lets his 5-minute rule time the exit. Same philosophy as the entry. A level of interest on the daily. Precision on the small chart. So he scales out, trimming into the 170s on the warning, finishing in the high 160s on the break. An average around 169 from an entry near 151. The leg is banked. The structure broke. So he steps aside.
The more times that it's tested, just like any level of support or resistance, the more likely it is that it's going to fail.
Now here's the part most gurus would hide. September wasn't the top. 4 days after the exit, NVIDIA gapped to a brand new high and ran to 192 by October. So did Brian blow it? No. He did the most professional thing in trading. He got out where his rules told him to. He protected the gain, and he waited for the next clean trigger to get back in. A fresh all-time high breakout, a fresh anchor, a fresh campaign, and that is video 4.
You know, and there's so many different ways of using the anchored VWAP. I love this quote is simplicity is the ultimate sophistication, and that's in anything that you do.
Money, 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 money.